Okay, morning everyone. It's Liam here, co-founder of Assets for Life. Just tuning into the Assets for Life property community Facebook page, and just tuning in this morning really just to see if anyone is about. I know it's on a Sunday morning, but I made a decision last night watching X Factor that I was going to open up a session this morning to people in the community and just to see if anyone is around and anybody wants to ask me any questions relating to property, finance, wealth creation, business, mindset. So just wait for a few people to log on and again just see who is about this Sunday morning. You know, if we've got some people around, that's great. We can get cracking on. Brilliant. I can see people are starting to tune in now. So morning to you. And thanks for tuning in to this Facebook Q&A live session. I know it's a Sunday morning, so we might not get, as many people on the session than we would hope. But let's see who is up and about. Great. So we've got some people online with us. Brilliant. So look, it's a Sunday morning. And I decided last night when I was watching X Factor that I would do this, special live Q&A session just to really see where you guys are at and to answer any questions that you have or talk about any blocks that you have or any struggles that you have at the moment in property. Maybe you've lost some motivation. Maybe you're a bit confused on what property strategy to take. Maybe you've been focusing on, let's say, land deals or commercial deals and, you haven't got that first or next deal over the line yet and you're getting increasingly frustrated. Maybe you're firing on all cylinders and you're smashing out deal after deal after deal after deal. Maybe you've just got your latest joint venture partner over the line. Wherever you're at, this is now a really great place to, ask me any questions. So for those of you that are online, if you want to ask me a question, because that's what this Q&A session is about, you ask the question, I'll do my best to give you the answer. Please put your question in the questions box now. So again, please put your questions in the questions box now, or comments or shares, or whatever's going on for you. And remember, no question is a silly question. Literally, you could be sitting there thinking, I don't really want to share this. I don't want to ask this because it's a silly question. What are people going to think? There is no silly question in property. There really, really isn't a silly question in property. It's a Sunday morning, so maybe your brains are still waiting to wake up and get activated. Okay, great. So a couple more people joining us. Excellent. So if you're just joining us, this is a Q&A session. So the only way that this session is going to carry on is if we get some people asking some questions or making some comments. So if you're online right now, great. Cradat, Scott, Nigel Ellis. Hiya, Nigel. Violetta, David McCarthy. I saw Doug Carter as well. Excellent, fantastic. So just want to say morning to everyone. So if you just joined us, this is a live Q&A session. All of you should know me by now. I'm the co-founder of Assets for Life. We're a boutique property investment and educational company. And in just the last 3 years, if you don't know this, I have been able to raise over £4 million in joint venture finance, £4 million. And we have added over £12.6 million worth of property to the portfolio. And that's a combination of flips, multi-let properties, land development deals, commercial conversions. We've got some serviced accommodation and some rent-to-rent deals in there as well. So yeah, that's what we've been able to do over the last sort of like 3 years. And we're now into our 4th year of trading. So I've been in business pretty much since I was in freaking nappies. And Jay, my business partner, you know, he's been in property for many, many years. He's a chartered civil engineer, very intelligent guy. And the two of us, we make up Assets for Life. So, great. We've got some questions coming through. Excellent. Great. So, okay. So we've got Scott Grant. Hiya, Scott. Scott is saying he's finalising a JV deal for 350 units. Should I keep the affordable units and become a social provider? Yeah, that's a really good question there, Scott. You could look at that for sure. Well done on getting your 350 units. That's a big development, which is absolutely fantastic. That's not a development size that I've been involved in myself before. So Scott, just explain a little bit more on that development. Were you the developer, and did you go and raise joint venture finance? Did you get investors to come in and do the deal? And where is the development as well? We've got our good friend Deirdris. Again, apologies for not pronouncing your name properly, buddy. He's asking LLP versus a limited company, good and bad things, please. Okay, so that's a good question. And just before I answer that question, just so everyone knows, I'm not a tax advisor. We do use Optimize Accountants. Now, they are our property tax advisors, okay? Everything that we have done in our business has been done through limited companies. I can't really comment too much about LLPs because we have been always given the advice to go down the limited route, and that is what seems to work really well for our business and our business model. But let me just talk you through, guys, what and how we have our systems set up. So you all know us as Assets for Life. You know, that's our branded company. That's our training business. That's our trading company. And in Assets for Life, I'm a director. My business partner, Jay, is a director. And then sitting above Assets for Life is we have 2 limited companies. We have a limited company called LJBR Prop, which is my personal property holding company. And then on the other side, my business partner, Jay, he has a company called Jay Lettings, and that is also his own personal limited company buying and holding assets. And those 2 companies are 50% shareholder in Assets for Life. What we then have underneath Assets for Life is we have different limited companies for all of the different deals we are doing with the different joint venture partners. Now, none of those limited companies are owned by Assets for Life. So Assets for Life is completely independent. Assets for Life doesn't own any assets. It buys 0 property. Every single limited company we have set up with each development, with each JV partner, my personal company and Jay's personal company, which really are like the motherships, they come down and become a 25% or 33% or a 30% or 40% shareholder in the new limited company that we have set up for a development with a joint venture partner. And what happens is with all of these developments, obviously, let's say we're buying, building and selling. What happens is, you know, the limited company will buy the asset. Let's just call it a piece of land. We'll raise the money, the development funding through that asset, through that limited company. The investors will invest into that limited company. Once we've sold all the units, we will then extract any profits out of that company the most tax efficient way. And then normally the monies go from the limited company up to our mothership companies, which is LJBR Prop and J Lettings. And then from there, we can decide how to extract the money out into our personal bank accounts. Now that might be through a salary, it might be through a dividend, or it could be through paying back any loans. And that's something you then decide working with your tax accountant as to how much you can extract out of your businesses. What we tend to do, because my wife is also a shareholder in one of my businesses, what we try and do between the two of us through minimum salary and dividend is we try and take up to about 90k, 90, I think it's, but let's just call it 90k, 45k each. And on that, we pay about, what do we pay on that? We pay about like 4 or 5 grand tax on 90k. And then the rest of the money we try and keep in our limited companies and investing into different asset classes. You know, it's not just property we invest into. I invest into gold and silver and funds and different asset classes. So we can keep the money building up in these companies. And then we don't need to take out as much money. Okay, cool. So we've got some more questions coming through. So for us, just to answer your question, we do everything through limited companies. We then obviously run all of our expenses through these limited companies, you know, legal expenses, and we try and run as much through as we possibly can. What's really important, ladies and gentlemen, and look, we have grown massively in the last few years. You know, our turnover from just last year to this year is going to increase by probably 300%, if not 400%. And we have recently now just taken on an in-house bookkeeper 3 days a week. You need to make sure that your bookkeeping is absolutely spot on. You need to make sure that you're getting managed accounts on a monthly basis. You need to make sure you're assessing your financials in your business at least once a month. And look, I'll be honest, we've not been great at this over the last couple of years, me and Jay, but we've now just got on a full-time bookkeeper, well, 3 days a week. That'll be 5 days a week soon. We've now got 12 different limited companies. You know, that's a lot of limited companies. Not that it causes me any type of pain or headache because I don't get involved with any of the admin. You know, my team do that. But that's 12 companies that you need to keep an eye on. And something which we've been looking for, which we have now found, is we've got a finance director that has literally worked with some of the biggest blue chip companies in the world. We've got a finance director starting with us in November, 2 days a month. And it's really important that you get a grip on your finances and you understand where you're going. Okay, that's great. So I'm just going through the questions. Keep the questions coming, everyone. This is a really powerful Q&A session. So we've got Nigel Ellis. Hiya, Nigel. My area is Loughton, Essex. I'm wondering what the best strategy is for my area. I'm sure you know property is expensive. I'm wondering if HMOs would work in this area. It's a great location for London. Just the 350 unit Scots. Never thought of going that big. Okay. Okay, great. So look, Nigel, great question. We are doing a deal in Loughton right now. So we've looked at Loughton for quite some time. I love the Loughton area. You know, you're literally, I think it's 32 minutes on the Central Line, isn't it, into Liverpool Street. You're, you know, Epping Forest, you've got M25, you've got M11, you've got great schools, you've got, people really want to, you know, live in that area. So in terms of like single lets, Nigel, and even HMOs really, the problem is the property prices are so high. When you then look at your gross and net income versus your capital outlay, your return on investment is very low. And there's other places not too far from where you are, Nigel, as you come out of, you know, out of that sort of commuter belt, you can get property prices a lot cheaper. Having said that, we are doing a land development deal in Loughton, Nigel. So it's just off High Road, yeah, the main high street, High Road. And it's just opposite the Marks and Spencer's. You might know it. There's a car park just to the side of Marks and Spencer's, and we've bought that piece of land. Gross development value on that, Nigel, is £5.5 million. We've raised joint venture finance. It's a no money down deal for us, and the expected profit in that deal is about 1.1 million quid. Now that's not all my money. I've got to split that with my business partner, and also our other business partner, Kevin, who was actually on the Assets for Life Academy. He brought the deal to us, and we're doing everything else. So that worked really, really well. So, yeah, Nigel, I think HMOs, your ROI is going to be a bit low there. I'd be looking more towards maybe some serviced accommodation in that area. You know, that could work really well. You know, SA. You could do HMOs, but again, you just got to make sure that you're happy to leave money in the deals. Because what we want to be doing as investors, ladies and gentlemen, we want to, where possible, buy, refurbish, refinance. And what we want to do is we want to try and recoup as much of our initial outlay as possible. So, for example, if you have to invest, say, £100,000 into a property deal to do the mortgage and the refurb and the legals, you then want to make sure you're adding value to that property. And then at some point in the future, maybe 6, 7, 8, 9 months down the line, you want to get a new value and refinance. You want to try and pull as much of that £100,000 back out as you can. And it is becoming increasingly more difficult to recycle all of your cash in these types of HMO deals. And this is one of the reasons why over the last couple of years now, we have been more focused on doing slightly bigger deals, land development deals, commercial conversion deals, where we've got two options. We can retain the asset at the end of the build, or we can sell the asset, or we can do a mix of the two. We can maybe keep some and sell some. Okay, brilliant. So just want to say morning to everyone that's just tuning in. Thanks for being here this morning on this special live Q&A session. So Nick, hiya Nick, how you doing, buddy? Nick's one of our investors, by the way. It's great to have you on the Assets for Life investor team. If you have no properties but have 30k, what would you advise to do with it? Invest it in flip a property or invest into a JV deal? Good question, Nick. And you are obviously coming on our boot camp. So do not do anything until the boot camp, 100%. And what we're going to do, Nick, at the boot camp is me and you, we're going to have a private session where we can look at your financial situation. Again, I'm not a financial advisor, I'm a business owner and property developer, but I can of course show you what we would do if we had 30k. And there's a couple of options. So probably too long a conversation for me to go on right here on Facebook, because it is a live Q&A session, but it would just there's just too much to talk about, and I need you in front of me, Nick. But what I would, as a general rule, with 30k in the bank, I wouldn't invest every single penny into something. I would leave myself a buffer in the bank account. So maybe £5,000 or £6,000 buffer in the bank. Just have that as a rainy day. And then the other money, you could invest it into a JV deal that where you're going to get a fixed rate return. You could invest that into maybe 3 or 4 rent-to-rent deals, Nick, and that's going to kick off a nice income for you. I wouldn't do anything really, flipping, unless it's like a big flip or a development. We don't do a lot of flips, to be honest with you. It's a lot of work for not a lot of money. I know a lot of people, they do flips and they're making like 20, 30k a flip. For me, it's a long time to do a flip for not a lot of money. I'd much prefer to put my energy into a bigger deal and make £500,000 quid or £1 million quid in, maybe double the time frame. Okay, Doug Carter. Hiya, Doug. Hope you're well, my friend. I'm just going through the questions, guys, so keep them coming. Okay, so Doug is asking, hi Liam, how much over bricks and mortar value do you pay for an existing HMO with a new 5-year license? They have marketed at 400k, but next door as a residential property is on the market for 350. Is the license worth 50k in it? It's in a poor state of repair. Okay, so be careful, ladies and gentlemen, buying ready-made HMOs. Okay, be careful. And the reason I say that is because when people are selling ready-made HMOs, they are normally selling it based on a yield. So they might be selling it at maybe 8 or 9 or 10 times the income. So for example, if it grosses £35,000 a year rental income, they might adopt a 10 times multiplier and they might be trying to sell that for £350,000. And other properties in the street might only be valued bricks and mortar as a family home at 200 or 230 or 240 or 250. You're still going to need typically 25% deposit. So let's say this, let's use your example, Doug, of 400 grand. You have now got to go and put £100,000 in this deal. You've then got your legals, you've then got your stamp duty, you've then got repairs. So you might be in this deal for say 420, something like 120k, something like that. The problem is, how are you going to get an uplift in value? Because to get a commercial valuation, they're going to base it on the rentable income anyway. They're going to base it on the... So it's very hard for you to pull out your initial deposit. We have done many HMOs over the last 3 years, and we use one of two models. Okay, so this is what we use. We use one of two models. The first model is we want to buy a property below market value that is not a HMO, and we will do a full HMO conversion into a 5 or 6 bedroom HMO, and ideally we want as many of them rooms to have en suites. So the conversion cost typically for us is somewhere in the region of £45,000 to £65,000. So it's a big conversion. Very hard to turn that property back into a residential house. So then when we get the commercial agent round, we are getting a really nice uplift on the properties. I'll give you an example. 7 Bourne Court, we bought the property for 151,000. We invested 60,000 on the refurb, so we're in for about 212 or 215, right? Commercial value was 280,000, and 75% loan to value. We got a £212,000 mortgage from Shawbrook, so we was able to get all of our initial money out of the deal. The second thing we do with HMOs, and if I was doing HMOs again, and we don't do as many now, but if I was really scaling a HMO business again, I would probably be more inclined to do this in this current marketplace, bearing in mind we've got the whole economy stuff going on at the moment. We've got Brexit going on at the moment. We've got surveyors downgrading some property deals at the moment. People aren't quite getting the values that they want. I would be looking to buy 3 or 4 bedroom houses that didn't need a lot of work doing to them, and I would just convert them into 4 and 5 bedroom HMOs. Not a lot of work needs doing. I wouldn't really go down the ensuite route, so I'd obviously need to make sure I'm in an area where that wasn't a major concern, and I'd be looking to buy property as cheap as I possibly can, probably in the region of about £100,000, £25,000 deposit down. I'm probably going to be making about £800 or £900 gross, net income per month off the rent, just on 4 or 5 rooms, which would give me about a 25% return on capital employed. So that's something which I would be looking at doing. So yeah, I wouldn't, it just sounds to me, Doug, it's too expensive. and your return on cash employed will be low, and it will be hard for you to get the money out. And definitely, just because a property has a license, it's not worth £50,000 more. Now, I'm not saying you can't buy good ready-made HMOs, but you've got to get it for a good price, and you've got to look on your ROI. Okay, so again, just be a little bit careful buying ready-made HMOs. That's just my personal opinion. Unless they're cheap. If they're cheap and you're getting a good ROI, like 25% return on capital, then that's worth looking at. Okay, Scott Grant just saying, yeah, the property was in Devon. He's a developer. He agreed terms with a landowner. Every unit is sold. They take 29.3%. I have funding from 2 clients in Journey funding the build. Brilliant, Scott. Well done, mate. Massive, massive round of applause to you, Scott. So wishing you all the best in your property journey. Okay, let's just see what else. Nigel saying, thanks, Liam. I know the area well. Well, yes, I know where your development is. I live 5. Yeah, it's the building next to it, Nigel. It's like the back of the car park. Okay, great. So we've got some more questions. Keep the questions coming. Loads of people just saying morning. So I just want to say morning to everyone. So we've got Chris Beck online. So morning, Chris. So this is Chris's question. Would you invest in a JV deal with someone for a land development deal for their first potential deal if the numbers stacked up? An old pub with planning for 17 luxury apartments. Okay, so good question, Chris. I'm guessing now, I'm assuming that you are talking about you being the investor. Is that right? Like you're the one with the money and you are going to invest into a deal with a developer. Is that correct? If that's correct, let's just use that as an example. Yes, that is absolutely a fantastic thing to do, because you can then work alongside the developer as an investor and you can get really good experience from learning about the development. So this is what we do with our investors at Assets for Life. So if there's anyone online today and you're thinking, wow, I'm actually an investor and I've got some money and I'd really like to invest it into a development deal and learn and earn, then please send me a private message after this Facebook Live, and we can get chatting, because we've got a good number of deals right now where we are looking for, we are happy to take on some smaller investors. You know, we've got our high net worth and our sophisticated investors, but we also like to work with smaller investors to get you in on the deals with us as well, where you haven't got to invest millions of pounds, yeah? So, yes, Chris, if you are going to be the investor, my friend, and invest into a deal, what's really important is that you have the correct legal paperwork in place. Please do not do anything on a handshake. If you're loaning the money, then make sure you've got a loan agreement in place. If you've got security, you need to talk about what security you're going to have if you've got security. If you're going to be more of a JV partner, then you need to make sure that you've got the correct type of shares. The right share class has been issued. You've got your shareholders agreement wrapped up. This is very important, ladies and gentlemen, because I know of some horror stories out there where people have not done things correctly and they've lost their money. Okay? Because they didn't have the right legal paperwork and structure in place. And what we do at Assets for Life for all of our investors is we've got an amazing corporate team of our solicitors, our tax advisors, our accountants, and we literally wrap everything up in proper paperwork so you, the investor, are protected, and we, the developer, we are protected as well. But yeah, that sounds really good, Chris. You know, if it's already got planning for 17 luxury apartments, what you need to do, Chris, as well, this goes for you've got to do your due diligence on the developers. It's like when you become an investor of Assets for Life, like I expect you to do your due diligence on us. Like look at our CVs, talk to our professional team. Come and visit our properties, yeah? Or at least know more about us. You know, that's really important. You know, have several phone calls with us. Come and meet us if need be. Now, look, if you're investing a smaller amount of money, you might not want to do as much due diligence, or, you know, because we're an open book and people know us. We've got a great name in the business. And of course, you know, we wouldn't do anything to ever jeopardize our relationship with any of our investors. But yes, you've got to do your due diligence. Okay, brilliant. So, Kelly Russell. Morning, Kelly. So, Kelly's question is, bear with me. Just checking what time it was. We've got a family day out today. So, the wife, Holly, who sometimes puts her foot down with me because she has to, otherwise she knows I'm going to be on this thing for like the whole day. She said, Liam, you can do a Facebook Live on a Sunday morning, but you've got to be done at 11 o'clock. So we're going to be heading out in half an hour. We're off to my mum's today to see my mum and my mum's boyfriend. And we've got a nice roast dinner. So really looking forward to that. So Kelly's question: how would you go about confirming your golden area? So yeah, like your gold mine area. Well, depends where you live, Kelly, and you have to do market research. So my business partner, Jay Munoz, whenever we're looking at moving into a new area, he will study the market, you know, relatively in depth for quite a period of time. So what does he do? He will, you know, if we're thinking of doing HMOs, for example, Kelly, we will go and talk to all of the letting agents as a potential tenant. Like, we'll go undercover and we will want to know what the supply and demand is like for HMOs. We will go and visit existing HMOs in the area to look for the quality, try and speak to existing landlords to get a feel on, are their rooms full or are they empty? We will always put up a dummy ad on spareroom.com and we will see what the interest is like for a new HMO in that area. We will also look at property prices. We will look at the town as a whole. We'll look at if there's any developments. Are there any big companies moving into that town? Bars, clubs, what is the town centre like? We'll look at supply and demand, not just for rentals, but also for buying and selling property. And so yeah, you know, when you go online and you start speaking to people, and also we'd go to property networking events in that area, and we'll get a feel for what's going on. Is there a positive vibe? Is there a negative vibe? What you've also got to think about, Kelly, is how far you're willing to travel. So for us, we do not like to travel any more than about an hour from where we live. Now, I do have a portfolio in Crewe and Stoke, but I've got a JV partner there. I've only ever been there once, and I manage that business remotely, but I've got people there that I trust with my life, so I'm happy to invest my money. And the reality is, you don't have to make this complicated. Like, there will be something, Kelly, within half an hour of where you live where some type of strategy will work. And what I hear a lot of people, let's say they start doing rent to rents. It's not working, there's an oversupply, I can't get deals, I can't get deals, I can't get deals. But what happens is people give up too easily. And I say to them, I say, right, okay, like, you can't find any deals. You know, how many agents have you called this week? Yeah, well, I've spoke to a couple. Well, 2 isn't going to cut the mustard. Whatever you do in property, be it commercial, land, HMOs, lease options, serviced accommodation, deal packaging, the one thing, well, there's 2 things, but the one thing that you all have to be super relentless about is finding deals. Okay, is finding deals, building those relationships, finding deals, analysing deals, putting in offers. I'm going to give you a system now, and I want you all to remember this. VOFM. So if you're ever in doubt and you're getting lost in property, just come back to the VOFM model. This was a model that was shown to me by one of my millionaire mentors, and I'm now sharing this with you. V is for viewings. Okay, V is for viewings. O is for offers. F is for funding, and M is for management. Okay. And the only way you are going to build a multi-million pound property portfolio that's making you big lumps of cash or going to generate passive income is if you're doing enough viewings, you're making enough offers, you're getting the funding in place, which is typically joint venture finance or mixed in with development finance and mortgages, and then obviously the management of that portfolio to make sure it's systemized with correct processes, procedures, checklists, people. And this is how you start to grow a really nice business. So Kelly, yes, not too sure where you live or what's important to you. And the other thing you've got to remember, ladies and gentlemen, is just because rent to rent makes a lot of money, you might not want to do rent to rent deals. You know, and I see a lot of people in property, they chase the next hot strategy. But he's doing SA now and I'm going to go do SA, but that didn't work, and this person's doing deal packaging and now I'm going to do deal packaging. And before you know it, you bloody run around the houses for 2 years and you haven't got anywhere. You've got to spend some time at the beginning really researching and thinking, right, who am I? What do I enjoy doing? What's my core skill sets? What am I good at? What am I not so good at? How much time can I apply to the market? Where do I see myself in what we call the property portfolio matrix? And then once you make that decision, you've got to commit 100% and go for it and then make some money. Okay, Geardris is asking a question. Hi, you buddy. Is it difficult to get 100% financing, 400k, 10-month period for a 12-room HMO if the numbers work very well? Well, you wouldn't get 100% financing. Are you talking about raising the money? You know, you'd obviously go and get a mortgage or you'd get development funding, but you still need to find the equity part of deals. It's what we call the equity part. And typically speaking, you know, if you don't know this, if you're buying a house, normally you need to find 25% of the value of that house and you will borrow 75%. Now, there's lenders out there and we've managed to get 80 and 85% loan to value mortgages. So I'm just generalizing, but normally you need to find 25%. It's the same when it comes to doing developments, okay? So let's just say your development you're doing is, you know, £500,000 to buy a site and all the other costs, including build costs, legal fees, you know, all of the other stuff is £500,000. So the total cost of the development is £1 million. Typically, you will need to find 20 to 25% of that amount of money to do the deal. So let's just say it's 25%. So what that means to me is I've got to find £250,000 to get this deal over the line. So when I get a phone call from Jay, this is how it plays out, right? Because Jay's the deal man. He's out there finding the deals and doing all the deal analysis. He does all the stuff that I hate or I'm not very good at. And Jay will call me and he'll say, Liam, we've got a deal. I go, brilliant. What's the total cost? That's the first question I ask. What's the total cost? And he'll say it's 2 million quid. And in my mind, I know I've got to find 400 grand. Now, the wonderful thing about property is that equity part that you need to raise to do these deals, let's say it's a development deal, you can just find that money from investors. High net worth, sophisticated investors, angel investors, you know, you name it. There's so much money out there at the moment. Like there's trillions and trillions of pounds. So much money out there at the moment. So, yes, you wouldn't get 100% financing from, say, a bank normally. You'd get 70, 80%. You could get even 90% in some cases, but then the terms on the loan wouldn't maybe be the best terms. Okay, cool. Okay, Chris is saying, yes, we'll talk in October. Yes, Chris, October the 20th, my friend, is the Property Investment Summit. So look, guys, I forgot to mention this. If you're on here now and you're listening to me, make sure you attend our up-and-coming event, the Property Investment Summit on October the 20th in London, okay? It's our next event. It's in London, and you can come and spend a whole day with me and my business partner and the Assets for Life team, and we'll help you. You know, we'll just hang out for the day. We'll talk about raising money. We'll talk about structures and systems and processes. We'll talk about scalability. We talk a lot about mindset. It's a great way to connect so we can become friends and potential business partners, and also talk about how you can work with us longer term. Why does that keep happening? Okay, cool. Marcia, hey Marcia, how you doing? Morning, Liam. I have 2 properties yesterday, 3 beds, room sizes are good. This is sold as a family home. I wanted to convert to a HMO. The only problem is they are building 3 student apartments. Okay. I knocked on a few neighbours and had a chat about the other houses, which for sale, sign only offering that they were originally student let. But how has now moved into new built student accommodation. I will be contacting council for landlords. Would it be wise to buy HMO in this area? Okay, cool. So if you are near student accommodation, you've got to look at, I take it you're near a university or you're near a college or something like that. So what you've got to be thinking about, if you get this house and you are amongst student accommodation or student HMOs, then this house in this area might not be suitable for professional tenants. So the question I want to ask you is, who are your customers? i.e., what is your tenant type? Are you going for students? Are you going for local housing authority? Are you going for professionals? If you're in a student area and you're marketing to students, then I can't see that being a problem, because as long as there's the demand. So go on to spareroom.com, put in the postcode and have a look at how many rooms are to let versus how many rooms are wanted. And if there's more than 1 in 3 rooms to let versus rooms wanted, that would be a concern of mine. If it's 1 in 2, i.e. there's 50 rooms to let and 50 rooms wanted, that wouldn't concern me too much, because again, spare room statistics are not 100% accurate, and we find if we're working in a 1 in 2 ratio, then that works well for us, as long as our rooms are up to the right standard and we're marketing to the right type of tenants. So I wouldn't say don't be discouraged by that. I would basically just make sure there's not an oversupply of student accommodation. And I'd be a little bit more cautious if you're then wanting professionals in that property, Marcia, because, you know, some professionals aren't going to want to live around a whole bunch of students, you know, partying and doing all the stuff that they do. Okay. Ah, we've got Leanne online. Yes. Hiya, Leanne. How you doing? Good to have you back with us. Lovely to meet you at our last Property Business Summit. And I know you've spoken to Nick, and I'm really looking forward to seeing you on the Property Millionaires Bootcamp. Okay, so Leanne's question. When it comes to estate agents regarding rent to rent, would you approach them asking if they have any suitable properties? Or do you go in as if you're looking for a room yourself and see what's available? Also, if someone already has a HMO that they want to hand over as a rent to rent, how would you make your profit? Okay, wow. So we've got a few questions there. Great questions. So let's just knock these off one by one. Okay, so anyone out there looking to get rent-to-rent deals, there's no right or wrong way of doing this. It just depends on you, and it can depend on the day. It can depend on who you speak to. So what I always teach and what I do myself is I practice and I test things, and I then manage and monitor my results depending on my approach. Now, me personally, and Leanne, you are coming on the Property Millionaires Bootcamp in your members area. So you would have got an email with access to your members area. In that members area is a home study program called the Property Deal Attraction Blueprint. I want you to watch that, and in that home study program, I teach you how to go and build relationships with agents. But I'm going to cover it off here anyway for obviously the rest of our viewers. Now, me personally, I'm a type of like shake your hand type guy. I like to look people in the eye. I've always been involved with sales and marketing and negotiating, like it's a really strong point of mine. And I really enjoy building relationships with people and turning no's into yeses. Like, I really get a lot of satisfaction from that. And I've been doing that since I was like a kid, right? Since I was like 6 years of age, selling stuff in the playground. I had my first business at the age of 6. So for me, when I'm building relationships with agents, and again, I don't do this anymore because my business partner does it, but when I did it in the beginning, I would literally make a list of all of the letting agents, and I'm talking about rent-to-rent deals now. I'd make a list of all the letting agents in my area. I'd put them on a spreadsheet or into a client relationship management system, CRM system, and then I would get myself looking all good. I'd practice my 60-second elevator pitch. I'd get myself G'd up. I'd get in my car. I'd put on some loud music. I'd get myself into the right state of mind. I'd drive down to my local area. And me personally, Leanne, I would walk into every single letting agent. Okay, and I will go and introduce myself and say, hey, my name's Liam. I'm the co-founder of Assets for Life. We're a relocations company. We work with many, many clients looking for accommodation. We are moving into the Colchester area, and I'm looking to build relationships with agents. Now, I've been on your website and I can see you've got some properties available to rent. Can we go and view them today? Like, I'm in the market. Can we go and view them today? And then what I would do, Leanne, is when I'm on that viewing, I will then start to talk about how we operate. Like, we take the property on a corporate let or on a management agreement. We've then got clients that will come in and stay, and then I'm going to test the water. Now, typically speaking, the people that we train in property, for every 10 agents that you go to, 60 to 70% of them initially are not interested in the rent-to-rent model. We don't do that. That's subletting. My clients aren't happy with that. Blah, 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 blah. You're going to get all these blocks, right? But you've got to keep going back. You need to educate them on the model. And, but yeah, you only need 1 or 2 agents anyway to bring you that first 1 or 2 deals. Kazim and Michael, who are on our academy, they done our boot camp. We was at the last academy day just a couple of weeks ago. They had a phone call while I was talking to them from one of their agents that said, Michael, Kazim, we have got you 15 property deals. 15 property deals. Now, this agent initially, when they first walked in there, was not interested in the model. Was not interested, but Kazim and Michael didn't give up. So you can't give up when you're trying to build the relationships with agents. Now, some of my students or graduates, rather than walking into the agents, they'll just call them. They'll go online. They've got, say, 15 letting agents in their area. They'll go and look on the website. They'll see what properties are available, and they'll just call and say, oh, hi, can I speak to, whoever is the letting manager? I'm on your website. You've got some properties which I'm interested in renting. Can I come and see them? And you book in the viewings. And it's on the viewing that you build the relationship. Okay. So next question there, Leanne, was... you could also go undercover with some letting agents. Of course, you can go undercover with spare room and go in as a potential tenant. Yeah, we've done that before. And if someone already has a HMO that they want to hand over as a rent to rent, how do you make money? Well, it all depends on how much the guaranteed rent is you've got to give this person to how much rent's going to come in, because you make the difference in a rent to rent deal. So for example, you might give a landlord £1,000 a month guaranteed rent, but that property as a 5 or 6 bedroom HMO or as a serviced accommodation unit, that might create, let's say, £3,000 a month. So you've got £3,000 coming in, you've got £1,000 going out to the landlord, but then you've got this £2,000 buffer, which you need to obviously allow for voids, maintenance, bills, all that sort of stuff. And then whatever's left at the end of the month, that's what you make. Now, I wouldn't do a rent-to-rent deal unless, all going well, we would make a minimum of £500 or £600 per calendar month. Okay? So, Leanne, we're going to teach you this, Leanne, on the boot camp anyway. Don't worry. Gabriel saying, thanks for the live. Should do it again. Yeah, I think what I'm going to do... well, I definitely am going to do, for the definitely the next few weeks, I'm just going to do more of these lives. The community, the Assets for Life community is really growing. I'm the co-founder of the business, one of the co-founders, and, you know, I want to make myself available to you guys as much as I possibly can. And so yeah, this is a great way to connect with me for free. You know, I charge a lot for my mentoring. You know, people pay me tens of thousands of pounds a year to privately mentor them. We now run what is considered the best property and business course anywhere in the UK. We have become the most personal and approachable property investment and educational company in the UK. And from what I'm told, our graduates have probably one of, if not the highest success rates in property. And I'm just amazed and very grateful at what we've been able to build up. So yeah, I'm going to do a whole bunch of these lives over the next few weeks. Laura, hiya Laura, Laura North. What is your opinion about purchasing in the auction room? Well, good question. Do not let your freaking emotions get in the way. Now, I'll be honest with you, I'm no good in an auction room, okay? And the reason being, I am a sucker for those types of environments. Like, if you get me in front of one of these shopping channels, like, I find it really hard not to buy stuff. Now, I love selling, and I also love being sold to. Like, I love a bargain, I love a deal. I really get this thing of like FOMO, fear of missing out. And I've got this thing inside of me where I just need more of everything, right? Like, I don't know what it is. I just need more stuff. And I've got this real big drive. So for me, I hate losing out on stuff. So if I've got someone next to me in an auction room, like, I just out of pure determination and stupidity, I'd end up paying more money for a house. And this is what you see a lot of, ladies and gentlemen, in auction houses. People are paying far too much money for the properties. And that's why auction houses are so successful, because they get you involved with this whole, it's very emotional. And you have got to be like a super, I don't even know what the word is I'm looking for, but you've got to be very calculated. You've got to be very calm in your approach. You cannot allow losing out on something to get the better of you. So I'll be honest with you, Laura, we have actually bought nothing in auction houses over the last 3 years. All of our deals have come direct to vendor or through estate agents. Having said that, I know that auction houses are a great strategy, but you've got to get to know the auction house auctioneer. That would be a top tip of mine. I'd go to a few of them first. Make sure you're checking out the properties before you buy them. So make sure you do some searches. So if you've got your eye on, let's say, 2 or 3 auction house properties, there is an initial investment needed because you need to get your solicitor to do the relevant searches. Like, you don't want to go there having not done your searches and basically buy something which is shite, okay, or you've got issues. So just be very, very careful. Marcia, why is that doing that? Marcia is just coming back from the comment earlier. My intention is to let to students. There are a number of student campuses. Yeah, okay. Yeah, I think that's not too bad then, Marcia. Just make sure there's not an oversupply of student accommodation. That is really important. So you could speak to the local campus as a mother of a potential student to say, hey, how many rooms have you got for students? You can go and speak to other students on the ground and get a feel for what's going on. And of course, do your research and do your dummy ad on Spare Room. Carlotta, hiya Carlotta, saying great, see you at the boot camp. Okay, super. So I think I've answered every question that has been put into the questions box, which is great. I'm just going back through everything. Yeah, look. And it is 5 minutes to 11. So, we got another question. Okay, so Danny, hiya Danny, morning to you, buddy. Hope you're well, mate. Talking about options to buy. Yeah, look, there's many different types of options you can get, Danny. And again, I'd need to have a bit more information, mate, about what you've been offered. So obviously, look, you're one of our Diamond Private Academy members. So why don't you just pop an email to Jay and I, because you've got direct access to us, just with a bit more information about that deal, and then I can answer that, or me or Jay will answer that for you, mate. Yeah, so we need to just know a little bit more about that, buddy. Yeah, options are good, but again, you just got to, an option could be anything you like we could do an option over this fruit shoot. Like, we could do an option basically saying, well, at 1 o'clock, I'm going to drink a third of it. At 2 o'clock, you're going to drink a third. And at 3 o'clock, I'm going to drink the rest of it. And we can have an option on that. We can draw that up into a legal document. So an option can be anything that you want it to be. And it really is like a blank piece of paper. We like doing lease options whereby, let's say, for example, a property is on the market for £100,000 and the person wants to sell it. But after speaking to the person, you notice that they're quite highly motivated. They're highly motivated. And actually, what you can do is negotiate with them that actually, look, I'm not going to buy the property off you now. I'll give you your £100,000. I'll have an option to buy this from you in, say, the next 5 years. But now I'm just going to rent the property from you to make sure your mortgage is covered and we give you a little bit more money. And we've done a few of these deals now, and they're very, very exciting. Because one, you're helping out the person that was originally, the vendor that was selling it. Secondly, I've now got an option to buy that property. Thirdly, I'm making profit on the rental income. And then I've got an option to buy that house at some point in the future if I want to. And normally what happens is prices go up in value, and then I've got an option but not an obligation to buy it. Yeah, send over the details, Danny, mate, and we'll take a look at that, pal. And of course, I'll see you at the next Academy Day. But look, yeah, I just want to end on this, really. Thank you very much for tuning in this Sunday morning. Thank you very much for being part of the Assets for Life property community. Whatever you're doing right now, you can all do this stuff, okay? But you've got to be driven, Like, you've got to want this more than you've wanted anything. And for many of you, because many of my graduates are doing this part-time, 5 to 6, 7 hours a week, using none of their own money and with relatively little experience. And what's important is that you spend a little bit of time every single day or most days working on your property business. Okay, and don't forget the two main key result areas: finding deals and finding money. But through property, there is help and support out there for you. You are going to have bumps along the way, but you will get so many breakthrough moments. And I'm telling you, once you get over that initial hurdle, this like learning curve, these blocks, these barriers, these doubts, what's on the other side is an amazing life where you can make a lot of money through land development deals, commercial conversions. You can generate passive income going into the tens of thousands of pounds every single month as a result of HMOs, rent-to-rent deals, serviced accommodation, a mixture of managing assets and owning assets. And you'll get to a position where you're just doing it because you purely enjoy doing it. Like, I want everyone out of the rat race. And if you're currently in the rat race, I want you out of the rat race as quickly as possible. I want you to be in a position where you choose to work if that's what you choose to do. You are not working or grinding out some business because you have to do that to survive. So whatever it is you're doing, stay tuned in. Enjoy the rest of your Sunday. Thanks very much for tuning in, and I'll see you all later. Take care.